Welcome back to this Monetary Policy Special. I have been speaking with economists Mriddul Saggar, former MPC member, Samiran Chakraborty of Citi, B. Prasanna of ICICI, and the State Bank Chairman. Gentlemen, thank you very much for your patience. Before I go to Mr. Shetty, Mriddul, do you buy this optimism, 7.2 this year and 7.1 next year, despite some of the soft data we saw in the second quarter that Samiran elucidated very comprehensively?
Too early to say, but I see risks more on the downside to that number. It's quite possible that we eventually hit 7.2 if the transmission from global slowdown is contained. But at the moment, what I'm seeing is that the global trade numbers, the global growth numbers might just start getting to be affected, and one has to see how they translate. And you mentioned the GST weakness and also the PMI weaknesses. We know it's not weakness. PMIs are still strong, but relatively these numbers showed a slight deceleration. So we have to see more high frequency indicators. But more than that, the rate cut decision would depend on inflation, and inflation data for November will not be available to the December MPC meeting. It will be available to the February meeting, and unless the consumer price data, what the Department of Consumer Affairs collect, shows a significant drop in agriculture prices, a December cut would be ruled out, and it's more likely in February.
Yeah, okay, but you're saying that there are risks to growth on the downside.
Yes.
With that backdrop, Mr. Shetty, what's the expectation first on loan growth? Given what the reserve, given the confidence of the governor in terms of growth numbers, do you think you all will do better than your forecasts on loan growth?
I don't say it's better than what forecast. I think most of the banks have given a credit growth rate forecast about 14-15%. There's slight moderation in August. If you see the numbers there, I think the credit growth is around 13%. But the second half is generally a busy season for credit growth because of the festivals and many other things which come up in the second half, what we normally call busy season. Yes. So I believe that I think the credit growth will come back to 14-15% levels. Okay. What has been slight slowness in our moderation is in the consumption loans, the unsecured personal loans.
Yes.
For various other reasons, not necessarily because the lack of demand. I think.
No, I was coming to that, sir. It was as unambiguous as the growth forecast was the governor's worries about unsecured debt, not from banks so much, more NBFCs, HFCs and MFIs, but still that fear that loans have been given too cavalierly seems to be there. So given that, as well as the already probably falling demand, would this caution of lending, all that impact both the quantity and the amount of retail loans you will give?
Yeah, so the retail loan, again, various kinds of retail loans are there in the broader category of retail loans. The segment probably would continue to grow, home loans, auto loans. What is being impacted is the unsecured personal loans, capital allocation. And some of the segments of customers, they are price sensitive. Even if it is a personal loan, they will not take if it is expensive. So as the risk weights go up, the rates also have to be passed on to the consumers. That is where I think some slowness is happening. Okay. It's also happening through the NBFCs and MFIs, where unsecured portfolio we see in the unsecured loan.
No, that makes two dampeners, right? The government may not be able to spend, as Samiran said, a 40% rise in loan year on year may be tough. Plus unsecured loan, you could be, a banker's lender's caution could also creep in. Just a word more, Mr. Shetty, what about margins? How much do you think they will be hit from here on for the entire sector, really? Should we shave off 20, 30 basis points?
So again, I think, Latha, this discussion we've had earlier also on the compression of margins. the compression of margins differ from one bank or one lending institution to another based on the portfolio composition. And, there are portfolios where predominantly high yielding retail loans, obviously there'll be some pressure. But I think well-diversified portfolios, what we are seeing is that every bank is trying to contain the cost of resources because obviously to get good quality customers, there's only so much you can increase on the rates of interest on the loans. So the cost of resources containment probably would help many of us to protect the margins, or at least to reduce the compression to the extent which is not very significant.
Okay. We're running out of time. Prasanna, you gave me a headline on bonds, 6.5 by March, almost. What would be the headline on Rupee? Considering that, we are not going to cut much, according to you all, or not even soon, and it's a great growth story, are we in for some appreciation? What's the range?
So I think a headline on the rupee can be given only by the governor, Latha. No market participant will be able to give it. But beyond that, I think we are stuck in a range. We are not able to appreciate when things are favorable and when inflows are coming, and not least because RBI also is there on the selling side. And on the other side, there is sometimes, for example, in the last couple of days, I'm sure there has been a lot, last 3-4 days actually, ever since the China stimulus has happened, there has been significant amount of outflows which are happening on the FPI side. And RBI has possibly been quite active preventing the rupee from depreciating beyond 84. So which then means that you might not be able to let it appreciate also whenever flows come in. So we are going with a kind of a range-ish kind of a call on rupee. So very difficult to say. Again, like I said last time, the only confidence with which we can say is that possibly what is factored into the forwards market by way of depreciation, that does not get realized on the spot side on rupee.
Okay. Well, just 2 words from the economists. Samiran, 6% 10-year rate by when? 6% 10-year yield. Do we see it in 2025?
6% looks tough right now. Means and at a time when you will be cutting rates to 6%, generally the spread, the term premium starts increasing, and you might not actually, the bond yields might not go back to 6%.
Okay. My producer is putting a gun to my head. I can't ask anymore. Thank you very much, Mriddul, Samiran, Prasanna, and Mr. Shetty for joining me and parsing an all-important monetary policy. For us, it looks like growth is, the governor's optimism is not yet part of market chatter, and the expectations of rate cut are also pushed out beyond 2024. That's the big takeaway. Thank you very much for joining us on this special monetary policy wrap.